All right. Good morning, everybody. We got NVIDIA today. As if anybody on the planet doesn't know that NVIDIA's earnings are today. Whatever. We got to get through it, get on the other side of it. I'm seeing the range for the potential earnings today getting wider and wider. I had to restart my Thinkorswim. It's one of the reasons that it took so long to start. I was trying to avoid doing this, but whatever. So we'll let that load in the background while we do what we're doing. Hopefully by the time we get there, it'll be done. So markets are getting a little bit of a push to the upside. That does not make us bullish. It's just a part of the wave function, right? Price goes down, it comes up. Whether or not it's setting lower highs or higher highs and higher lows or lower lows is what is going to define whether or not we should be looking long or short. But by itself, just having a green day does not mean anything. No different than having a red day in a bullish market, right? Doesn't mean we're going to sell off and go into oblivion just because we had a red day. Japan's up the most, more than 1%. The UK is basically flat. Hong Kong at a quarter. It's not bad, right? Things are looking relatively decent out there. What we want to avoid is really big swings to the upside today. You know, some of the biggest bullish days come during a negative market environment, right? We are in a negative gamma environment. So we can have one of those fabulous, absolutely amazing rips to the upside, you know, like a 3 standard deviation, just monster move up. It can happen in these conditions, but that still wouldn't mean that we're bullish. So we're going to get a little bit of housing data. We got some government officials chipping their teeth, and then the FOMC minutes today. We got an auction today too, right? We got the 20-year. That's one to pay attention to. Also, the EIA crude oil inventory, right? I want to see what the petroleum stockpile is for the strategic stockpile. Is basically the collar that's around crude prices. All right, well, that's not working. It's broken. This is Gamma Lab briefing, and they say that CTAs are not sellers yet. Now, they did agree that they've been rotating out of the S&P, and we saw that when we look at Mentor Q, you know, and it's the green and the white lines, and I showed how we were consolidating, and then they broke that consolidation and was reducing their position size. So sure, they've been getting out a little bit, but they're not like massively selling. Gamma Lab and Mentor Q both track CTAs. Their charts are unique to each platform, so they don't match perfectly. And why should they, right? They're not obligated to use the same data at the same starting point. So it's never going to look exactly the same. The main takeaway is that if CTAs were just complete sellers, they would be smashing it to the downside, and they're not. They only reduce their position size some, which is different, right? Reducing allocation and cleaning up the holdings isn't the same as just dumping everything you got. Right now, the LIS, which is line in the sand, 65.50, basically, if you want to round that up. It's SPX levels, not ES levels. 6,800 to the upside. It's actually 6811 cog line and 6547 on the downside. That's the range or the channel that you have to deal with. Get above that, we can run back up to the highs. Get below that, and we're going to go see the 200-day, and then, you know, likely get below that. Good times. This is a little loud, but you get used to it. Look at NVIDIA. And while it is loud, we can reduce some of that noise a little bit. What we want to look at are all of these labels in the top here. When you put them all together, they summarize however long the look back period was on the chart. This is looking at 2 years, so 8 quarters analyzed. NVIDIA's beat 7 out of those 8. If you're looking at the 21-day ramp into earnings, NVIDIA is generally positive, making more than a 10.5% move. So they generally buy into earnings. If you're looking at the 8-day window into earnings, the 8 days before they report, NVIDIA generally starts to go sideways and is down less than 1%. If you look at what happens to NVIDIA after earnings, it's generally down at around 0.5%. So the 8 days before and the 8 days after earnings for the last 2 years, if we were to use that for our analysis, NVIDIA pretty much doesn't do anything. Into earnings in that 1 month coming into earnings, it tends to make some pretty good moves, and then it just stalls out. And that makes sense because there's so much money piled into earnings for NVIDIA that no one side has control, right? Neither side can take advantage. So we end up with this sideways market where everybody's betting on the potential for greatness and massive moves in either direction, and we end up doing nothing. So who wins? Premium sellers. If we look at the stats, up days between 0 and 5% within 8 days after it reports, none. If we look at 8 days after the report, how many of those days moved greater than 5%? 3. So if NVIDIA goes up after earnings in that 8-day window, if it goes up, it will go up more than 5%. It has not yet gone up and been less than 5%. So if you're looking for calls to the upside to play using expirations that are after earnings, you can go out of the money quite a bit, right? focus on option strikes that are greater than 5% away because you have the capacity to hit that level, right? They're out of the money lottos, but they're out of the money lottos with some statistics behind it. To the downside, after the report within 8 days, how many times we moved down but less than 5%? Once. And then how many times we moved down but more than 5%? 4. So out of 8 earnings, 7 that beat, NVIDIA's moved down 5 out of 8 earnings, even though it only missed once. And those moves were greater than 5% for most of them. There's a little bit of math in there that says even if NVIDIA beats, it is likely to go down, and that it is likely to go down more than 5%, even if it beats. But that doesn't mean crash and burn, right? So just some stats. And if you want this chart with all of the buttons and bells and whistles, just let me know. I didn't make it. It was one that was shared with me a long time ago. And yeah, it's pretty handy when you're doing earnings to have those kind of stats at your fingertips. And of course, I could have just added more time to the chart and it would have looked at more earnings, right? Because that's how the indicator works. Again, all right, we are still underneath the 10-week and the 0 gamma line. So we are in negative gamma. When we are in negative gamma, dealers will sell into selling and they will buy into buying. They don't normally do that. Normally, if we go up, they are selling into strength and they are buying into weakness. That's why in a more bullish market backdrop, the candles aren't usually so big on a day-to-day basis, right? If you look at a good, clean, healthy, bullish market, a lot of times you just have good, uniform size green bars without massive wicks on each side, and they're not big Pinocchios and big runner moves. They're just nice, clean, uniform 1%ers and 0.75 decent size moves. Because of the way the dealers are hedging and constantly tweaking their positions, we don't generally get big, massive moves in a good, clean, bullish backdrop. Once we start getting into negative gamma, however, the days get really big, up and down, because they will pile on whatever direction we're going. If we're going down, they'll smash it to the downside, and if we're going up, they'll smash it to the upside. They don't care. It's all about balancing their risk. We've been talking about this for a while. The high that we set, the lower high that we now own, this low that was set, I mean, it was a higher low, but now that's been breached. So we've got our lower low. The thing is, we don't know if that's going to be the lower low yet. We know that it is a lower low, but is it the lower low? And what I mean by that is right now we are next to it. We haven't gone anywhere. We didn't do anything yet. We need to get away from this. So we could wake up today and at some point we could fall down and we could close somewhere down here. And that would mean that yesterday's bar has no bearing or impact on our analysis. We wouldn't call yesterday's bar a lower low or a higher low or anything like that, because it wouldn't matter anymore, right? We need to see how today resolves. If today keeps going up and breaks yesterday's high and closes somewhere up here, then we will look back and say, oh yeah, that was That was a lower low, lower than this low. But we have to do that first, right? Or it doesn't count. So we don't have any answers yet today. The day needs to end so that we can see where we are to figure out what we've got. If we close inside of yesterday's range, we still don't know if this is going to be the low or not. Because if you play that scenario out, if we close within this range, then the next day we could do it again and close within the range, and then the next day. And that just means we're building this range down here. Now, after the third day, we would start to consider that this is just the low. But if we close one day here, then the next day we go up, that'll be a nice lower low. If the next day we go down, then again, it was just a pause point. It wouldn't matter and it wouldn't be counted later. So we got to get outside of yesterday's range. To the upside, that'll make it a lower low. To the downside, it'll just take it off the board and we won't count it at all. Simple enough, right? We got some levels that we can use. Yesterday's mid, we are now above it. We need to keep it. That's 66.50. If we get outside of yesterday's range, we've got 67.50. We've got to get through it. I swear you couldn't make that up if you wanted to. All I did is laid out the fib levels, the quadrant lines, and marked the halves, and they lined up right on the 50s that we've been running all along. Yesterday's low on the roundy, 6,600. Yesterday's mid, 66.50. If we break that, we've got 6,700 or 67.11, which is basically yesterday's high. And then outside of that, 67.50. That's also the 10-period daily moving average. The 50 lines up with yesterday's Monday's mid-ish. So we got a lot of trash overhead, a lot of reasons to believe that we won't be able to sustain that or that we won't have the push to get through that. 3, 50, 20, 10, they're all stacked over our head that we've got to get through there. This doesn't look like we reached any sort of capitulation levels yesterday. It doesn't feel like it. So there's likely more selling, and that this is just some sort of bounce on support to run up into some sort of resistance, maybe that 50 or the half back that I've marked here, and then roll over, break this low, and test that next lower level. I've been talking 65.50 for a while, and how we resolve this level really matters. I'd like to punch through it, get one of these Pinocchio bars, really strong reversal, and then a rip back up. But we need to have that capitulation selling in there, right? We need people to throw up their hands and puke their positions. If we just work our way down laissez-faire, then I'm not so excited that this low is going to be the low. $96,000 in the overnight last night. It's a little lighter than it was the day before, but it's still heavy compared to what we're used to. We usually run in the mid 50s, so sitting in the mid 90s is a bit much. And then when we look at where that volume was spent, you know, did we get the overnight kill move or anything like that? The kill zone really didn't have much to offer, and it didn't unwind the way it normally does, right? Usually you get that 2 a.m. move out of Europe, and then we retrace it and take it all back again. We didn't do that. So we're still running above VWAP. no reciprocation or zipper pattern at this point. If we begin to drop, then of course that's the target. And I would, at the bare minimum, expect the same distance on the other side because reciprocation, right? That put us back down into like 23. Low a day, if we break it, or low of Globex, then we'll challenge yesterday's low and go for that 65.50 level. Just get her done. The red line on the top side is the ADR half. It's inside of yesterday's range. So we don't need an inside day breakout to get to this level. But if we want to get to the full ADR, then we're going to need that breakout. To the downside, we can't hit this ADR unless we get that breakout. Plus, we're already a lot closer to this ADR than we are that one. There's a phrase that says if we hit this side early enough in the day, we can go to that side by the end of the day. But the clock is ticking and the day is half done. If we don't get up there soon and tag that thing, then we take that off the table. We're just run out of time. We can't make the trip. But we know price can do whatever it wants, right? So if headlines come in and things get violent, we could hit both sides easily by the end of the day. Still, if we do get to the upper edge, we want to see if we get above it or not, because getting above it will allow us to challenge yesterday's high, and we can get that 111 or 1236, which likely puts us close to the yellow line. It didn't get us as close as I thought it would. So outside of the RTH from yesterday, we'll focus on all of yesterday. That gets us up to the yellow line. The 111 and the yellow line, which is the full ADR. I like that spot for a reversal. The thing is, if we start pushing to the upside, you're probably not going to want to stand in front of it today, right? Because we've had some pretty big moves in the last 4 days to the downside from 6,900 to 6,600. And we could get some whiplash today that takes us roaring back in the other direction, and that it wouldn't make us bullish, right? Hopefully I stressed that enough. It's not going to be bullish if we come ripping back in the other direction. Think of that bungee cord, right? When somebody jumps and it stretches and stretches and stretches, and then they pause for a second, like the little road runner look, and then they go flying back in the other direction. Well, on that bounce back, they never make it to the platform they started on. They come up a bit short, right? They don't make new highs and higher highs. They make lower highs. I was watching where things go wrong videos. Yeah. If you weigh as much as a car, you probably shouldn't try to bungee jump. There were some really bad videos on where things go wrong. Anyways, got sidetracked. Saw a squirrel. Today's floor pivot is lower than yesterday. Price opened below the floor pivot. Both of those things are bearish. Yeah. Yesterday, we never hit the floor pivot. So that's an MDP, missed daily pivot. It's not consecutive, though, because we've already hit today's. So that's done. The thing is, we're underneath yesterday's pivot. So we need to get above it. And I would carry forward yesterday's pivot. I know normally we just carry forward the point of control for the volume profile. We don't normally carry forward the floor pivot. I would carry that pivot forward. 67.20-ish. Nothing wrong with it. What's the worst that happens, right? You mark it and nothing happens, and it didn't cost you anything. Yesterday's floor pivot channel was the resistance that we weren't able to get through. And just above that level, there's likely some drama. But if you think about it, that whole thing lines up with yesterday's 111, right? So why not? All right. The SNR levels for today, which by the way, guys, these levels, they're just math, right? If you was to go out and Google floor pivots and floor pivot levels, you would find that there's a math formula to make these. And it's things like yesterday's high, yesterday's low, yesterday's close divided by 3, multiplied by blah, 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 right? And it's just this wild little formula to get these S&R lines. There's no quote technical analysis behind them. They're not personal lines that I made. They're just math. And some places like bar charts will give them to you, or the numbers anyways. You just tell it what market you want and it'll give you the levels for the day. Pretty handy. That way, if you're not charting things for yourself or you don't have the platform to do it, bar charts will just give you the answer, the numbers. R1, we're going to need an inside day breakout of the RTH of yesterday. Same with S1. And right now, we don't have a tag on either side. It doesn't owe us anything today, and it is NVIDIA's earnings. So I got this sneaky suspicion that we're going to stay inside of yesterday's range and we're going to wait on NVIDIA. But when I say stay inside the range, I mean we're going to close inside the range. We can wick out. And I kind of expect that we will wick out. But I'm not expecting that we actually go anywhere. And if you liked yesterday afternoon trading in this, well, you're going to love today. But if you didn't like trading in that yesterday, you're probably not going to like today either. So your best bet is to play the edges, look for the reversals off of the high or the low of yesterday with the 111 to 1236. And if we get through the RTH, then focus on the absolute high of yesterday as the final flip point with a 111 and a 1236 on top of that. Yeah, I'm missing the bottom, but it's close enough. It's close enough. And you can see that 111 lines up on the floor pivot ish, right? I missed the tail down here, but you get it. And that's if we go anywhere today. I have this sneaky suspicion we're not going to go anywhere today. 6650 is the top of today's floor pivot channel. It's also yesterday's midpoint. So that's a lot of structure, a lot of resistance that we have now finally made it to the other side of. Old resistance becomes new support. That's where the Busby comes from, right? So no surprise if we drop back down and bounce off of the top of that pivot channel. It's just such a big gap. And every time I look over there, I just get the shivers. What's 250 points among friends, huh? I said that to someone the other day and they said, "You ain't my friend." I didn't make the market go down. I just pointed out that it probably was going to go down. All right, so we got the profile on the week, and we don't really have a tail that counts for this. but you could consider that the lowercase b, the distribution on the bottom side. I don't like this part of that tail to call it that. Instead, this is like a little micro distribution on its own, and then there's another one, which would be two different distributions with the point of control in that area there, right? That's, I think, the more appropriate way to read it. If it was a skinny little tail, then it would look more like this here, right? Really skinny distribution. And then a classic P shape like that. But that's not what we got, right? So very small distribution. If we was to make our way through the point of control that's over our head right now, then we've still got 6,700 as the value area high. Then it gets thin, so we should be able to move through that zone relatively easy, and it starts to widen back out around 6,750, which makes sense because we've been running 50. I do need new friends. Yes, I do. We were bowling with the fire department and the police department for a while, but it's always so much doom and gloom. And like, you guys need better jokes, better stories. $10-day, 30-minute volume profile and TPO. The point of control did move down where we thought it was, but unless we hang out down here at this 6680-ish area, then it's not going to move anytime soon. We've got to develop a whole new spot. It's worth noting that yesterday we didn't put a lot of work in along that 6600. Not a lot there, all things considered. So maybe we'll build it out around that 6670-ish area. Otherwise, what's more likely is that we make our way up into that 6750 and we put more work in up here. Yeah, I drive a Kawasaki, and most of the Harley riders that I know don't like my Kawasaki. They're Harley snobs. All right, we got a new VPOC from yesterday. We got really close to hitting it. Really close. But close don't count, right? Hand grenades, horseshoes, marriage. So that don't count. I guess we could look at that as front running. They put in a lot of work last night when we got up in this zone. This is a good demonstration of sellers sitting there waiting. Down here, we did not run into a bunch of buyers. Sellers just got exhausted. We didn't see that high level of volume along the low here. So we've got three distinct distributions this morning on the volume profile. The TPO, yeah, I guess it kind of shows that third distribution well. 6632 cog line. So if we break back down inside of the value area, we'll test that point of control. Then we get underneath that, get shallow into the cog line. I wouldn't even focus on this value area low here. I would focus on the low of the day instead. It does get really shallow underneath this last distribution, that 6632 cog. So should start to pick up speed. Maybe, yes, the Globex low is like a speed bump, 6611 cog line, and we just run and challenge yesterday's low. Yesterday's low didn't have a lot of defense either, right? We can see buyers didn't step in and run that thing back up. It looks like they stepped in maybe somewhere in here. But we can't say that that was buyers, right? That was just a lot of, that's like an everybody thing. At least with this picture, we'd have to bring up like an actual TPO chart and break down who was doing the trading through that. The main thing though is that when we dropped out of that range and tested the low, wasn't anybody home. So we'll see if we get anybody down there today, if we can get down there. Remember, the expectation is that we sit sideways today and we wait on NVIDIA. And sideways can mean that we wick out on either side, or heck, even on both sides. There's no bias to that one. We're just expecting the market to hold the line and wait on NVIDIA. And if you look at yesterday's range, it's a pretty good size range. There's plenty of room for us to move around in here. And if we really wanted to focus on it, that's a really good range to wait for NVIDIA's earnings. Just cut those wicks off on each side. Use the bodies up here and the bodies down here. All you're adding is the body of yesterday, Monday. But it's a little more nuanced. I really don't think you need it. You could just stick with yesterday's levels until or unless we break out of yesterday's range to the upside and we keep going, then we could bring in the other levels, which is basically 67.50. It'd be a nice 100-point move today. But why would the market run up into NVIDIA's earnings on the day of earnings? I just don't see it. Some other news could do it, certainly. We do have the 10-year today at 1 o'clock. So looking at things that are down, we got China, Bitcoin, energy. Really, that's about all we got that's down, which isn't bad, really. You know, all things considered, we take it. Looking at what's up this morning, nat gas, uranium, gold miners, metals and mining, Mag 7 up volume, quantum, mags again, consumer discretionary. These are the things that we would want to see if we were looking for a rally day. The thing is, I don't think we can get a rally day today because of NVIDIA's earnings. And don't forget, we got the VIX expiring today too, right? And that alone can have its own shenanigans just all by itself. So if you see the VIX open gapped up this morning with this big wide gap, don't freak out. It's the VIX options expiration, and it generally gaps to the next level, especially when vol premiums are elevated all over the place and each new contracts series is higher than the last by a significant amount. But we're not in backwardation, right? So if we were in backwardation, the gap would be down, not up, because the front end would be higher than the farther series. So keep your eye on what's up this morning. Chips are up, but not enough. SMH, for an example. We want to see that get into like 0.5% and better. If it stalls and continues to fade, then we don't have that. And sure, I mean, it's slightly green today, but it's down. It was down 6.5% over a 5-day period. Of course, it's going to get a little bit of a bounce. It fell a long way, right? A 6% fall. What do you expect? It's going to bounce a little bit. A lot of these look that way. Metals and mining, same thing. It's up near 1% today, but it was down close to 7% in a 5-day period. Miners, same thing. Uranium was down 10%. Gotta get a little bit of a bounce, right? Because it's part of that wave function. So don't let today, if we do get bullish, don't let it twist your bias into thinking that it's time to go long in everything out there. I mean, it probably is, but we don't have the signals for that. And me, I don't like to go long when everything's already green, and I don't like to go red when everything's already red. So I like doing things early. At least that way, when you're wrong, the loss is less. If I was shopping for options to take the other side, I would do it before everything turns, but I wouldn't do it today. I don't see it yet. We got to get through NVIDIA's earnings and see what the consensus is. It's been this balancing act for a few years, and everybody keeps saying that at some point they're going to miss horribly. It's going to just completely unravel and it's all going to fall apart. Really don't think that we're there yet. That doesn't mean that they can't disappoint and not do as good as the street expects. And remember, earnings are always a gamble because no matter how good it is, it can still go down. Or no matter how bad it was, it can still go up. That's exactly right. You do you. I like that. Yeah, I've said that one before for sure. All right, so let's wrap it up here nice and easy. GTFO, like always, got to get out of the box before we do anything else. And right now, that box happens to be our own Globex range. Once we get outside of our own Globex range, we got the RTH of yesterday to deal with. And then outside of that, we've got all of yesterday's range to deal with. Now, to the downside, the RTH and all of yesterday, it's the same thing, right? So there's just two levels to break to the downside. Globex low, yesterday's low. To the upside, we got Globex high, RTH high, full high. Got to get through all three levels. If we are just sitting inside of that RTH from yesterday, then we've got nothing. And it's very likely going to be a lot of this and a lot of that. And if that's what you liked about yesterday, well, cheers. You're probably going to get a lot more of it today. It's easy enough, guys. Got to get those headlines. Be careful, be safe. Watch the clock. We got that auction today, and those ain't no joke. They can certainly move the markets.